All right, everyone. I've got one of my clients and good friends named Ian here. Ian is from the UK, and what's interesting about his story is it was just a couple months ago that he was nowhere near what you would call profitable. He had tried algorithmic trading and automated trading for quite some time. He had also tried manual trading. And then some things happened when Ian came into Mission FX and some things that I suggested that he change to start going on a different trajectory in his trading journey. And now we've wound up where today, where the past two, maybe 3 months, Ian will tell you, the past 2 to 3 months, Ian has demonstrated consistent profitability so far at this moment in time. So we have someone right here, Ian, who has who was not profitable a few months ago and is now showing at least initial signs of consistent profitability. We've had a lot of people in our group ask how Ian was able to do it. So in this call today, Ian has been gracious enough to take 30 minutes out of his very busy schedule to sit with me on this call so that we can do our best to help you guys who are focusing on that transition from not being profitable to break even and then to profitability. Ian, why don't you introduce yourself and tell us how you got started in trading?
Yeah, sure. Hello, my name's Ian, obviously. I've been in trading um, unprofitable, I'd say 15 years or more. My journey started back in, I would say around 2006, 2007. I was reading a lot of books, but at the time I wasn't actually looking to get into to trading. It was property. And so I'd read books like Rich Dad Poor Dad and The Cash Flow Quadrant, those types, and I went on courses. And I actually did a session in one of those courses on trading. I got introduced to it. And anyone who was around that time, 2008, will know there was the big financial crash, and it became really difficult to actually finance property. So I looked at other opportunities, and it just so happened that I've been on this course was introduced to trading, and I literally got the bug for it straight away. That's how I got into it. So I was trading a 5 grand account, and I was doing stocks at the time. And so anyone around that time that was trading will know around about November 2008, the market's just plummeted. It just dropped suddenly. I was making a little bit of cash out of it. So I was extracting £1,000 here and £1,000 there off that 5,000, putting it back in and reinvesting it. But I was sat at home with my partner at the time when it all happened on over the weekend. I can't remember the exact date, but I watched my income. So my account size dropped from about 6,000 down to less than 1,000, and that has a psychological impact on you. I made a lot of mistakes at the time. I closed down everything, and that's when I started looking for other ways of trading, and that's when I discovered forex. So I've been trading forex since about 2010, I would say. So it's about 15 years. Around that time, I was attempting to get into it as a profession. So there was a group trying to remake the Turtle Traders. It was in the newspaper. It got given to me by, I think, partner picked up the news article, and I applied to go down to London. And I sat in a room with probably about 100 people applying, doing this exercise where we'd follow the questions. I'd fill out the questions, and I was only there for about 5 to 10 minutes, and then I walked out, and I didn't think anything of it. But I got down to the last 20 applicants, so there was thousands of people that applied, and I was invited back to the office in Liverpool Street to have a video interview. And this was back in February the 2nd. And there's a reason why I know this date, 2011,
Mm.
in the office around midday. And I met the guy. You can look him up on the internet. It's called Mike Baghdadi. He I actually met him in the office at the time, but I went through the interview and I was telling the guys what I was up to with trading, and I buckled under the pressure a little bit because I had a daughter on the way. I had you know, a young son, and they did say at the time, "Now that's a lot of pressure. Do you really think you can take on all this extra pressure?" I'm like, "Yeah, of course I can do it." But I was being really cocky, and they can see right through it. So, you know, in terms of psychology, I wasn't in a good place. I had pressures, you know, money pressures and the like, and I was trying to switch to a new profession, and they caught on that, you know, this guy is probably too much of a risk. So I didn't actually get through. But as I got home that same day, my partner at the time was 3 months behind, before, you know, 6 months pregnant. My daughter was born the same evening. So you know, it's 3 months premature. So I think it was just one of those events that happened, which kind of led to I still had this trading account with Forex, and it was 10 grand in the account, and I got it up to 15 grand, and I was too cocky and I lost it all. I blew the account, you know, and this happened around May, and it almost broke the relationship that I had. And you know, I knew new baby on board, but you know, because the profession I do, I could cover my losses, but it was a very difficult time, and so I kind of parked that, doing the manual trading, and that's when in 2011 the whole algorithmic thing started. I was trying to automate it, and being an engineer, it was right up my street. So I spent a good 4 years on a system, an algorithm that I was building, whether it was on a train, on an aircraft. I was literally coding this thing, testing it, and I came to the conclusion in 2016, end of 2016. After switching it on for a while, it was making profit and losing it, so it was always break even. And then I would say towards the end of 2017, I closed it down and I went back to manual trading and doing what I was doing before, which was effectively, when I felt the market was going up, I was going to buy it, and when I felt the market was going down, I was going to sell. And I turned a £25 account into 2,500 overnight doing that. I say overnight, it took about 2 or 3 weeks. And around the time, this is 2017 now, my mum fell ill, and we found out she had pancreatic cancer, and I blew the account. So my mum passed away in May of that year, and then I went back into looking for what I'd done wrong. I hadn't actually done anything wrong, and this. So you know, I did lots of training. I went on to courses, spent a lot of money on different companies. There was Greg Secker's group. I went through all that. I did the whole ICT thing in 2019. I did that. There was other guys which I tried as well. They all focused on high technical stuff, and I understood relatively what they're doing, but I could never make profit out of it. And I don't think it was until I picked up one of your videos, and I would say it was about a year ago, or a year and a half ago, and something twigged for me. I think it was when you were talking about keeping it simple and control your risk. I wanted to try and recreate what I was doing back in 2016, because I've had a few times during my trading past where I've done a certain thing and it's worked, but I've never been able to recreate it, and I didn't realize because it's very similar to what you're doing when you're leveraging in your the DCA approach, the dollar cost averaging, where you got a trade, you know it's going to go in a certain, sorry, you got a feeling it's going to go in a certain direction, but it goes against you, and you keep, and if you still feel it's going to go in that direction, it's going to go up, then you keep adding to that until it turns. And that's whenever I've been successful in trading, that's what's always happened. But because of all these separate incidents that have happened over the years, I've kind of lost or gone off the track, and I've felt like it's because of something else I'm not doing. But I was so close to the actual answer, and then something else comes along, and I start digging into that.
Okay. So just to summarize everything, so you've started trading like almost 15 years ago.
Yeah.
You've gone through this long extended process of trying manual approaches as well as automated approaches. And every time you feel like you were getting right close to having the keys to the kingdom to unlock the door to consistent profitability, something would happen that would then prevent you, and that would be a setback. You'd take one step forward, one step back, and you hovered in this area for 15 years up until recently. You said a year ago you found me, you decided to start keeping things simple and controlling risk. And then I can't remember how long ago, it was maybe 4, 5, 6 months ago. You and I actually had a conversation in a live session where I kind of pointed that out to you, like, hey, you've been trying automated trading for a long time. It's very, very difficult, as you know, to create an automated trading system. You being an engineer yourself, very experienced with software and code, and you still haven't been able to do it for the past 15 years. So you decided to take up manual trading, but approaching it differently, approaching it in a way that is extremely simplified. So I think what a lot of people are probably wondering right now as they're listening to this, they're like, okay, this guy Ian, he was trying this for 15 years and failing, but just now is he starting to develop some form of consistent profitability so far. There's some signs of life per se. I think what a lot of people are wondering right now is they're wondering, how do you actually trade right now? Like, what is working? Explain all that.
The simple part that's made it really simple for me is my attention is on the daily, rather than the lower time frames. So when I'm coming to the markets, my analysis is so I would scan not just one that I would normally do, I would scan them all. And all I'm looking for is, has the price gone so far in one direction? Yes, then at some point it's going to turn. And that's all I'm looking for effectively. Once I mean, the term I'm going to use is overextended, but overextending could be subjective.
Mhm.
Unless you take it a certain amount of context into what you're looking at on that chart.
Mhm.
So it's literally highs and lows. When I see price has broken a previous low on the daily, so if I was to use something like a zigzag, which is how I'm visualizing it, and anyone would look at it and say, well, it's trending down. So if I've got if you picture in your mind's eye, I've got a lower low, and then price pulls back, it forms a lower high, and then that previous lower low gets broken,
Mhm.
and at some point, price is going to reverse slightly. Now, that's on the daily. So if you drop down to an hourly, it's going to look like we're now into an uptrend. So that's literally all I'm looking for. I would buy when it's low, which it is there, and have a target of say around about 50 or 60% of a retracement, which is kind of what we term returning to the mean, a mean reversion.
Yeah. Okay. So like a trade kind of like this. And then for like a sell, what? I assume it would be like something like this. Like you're just waiting for it to make like a clear higher high, and
Yeah.
then you're just selling. Okay. Let's try to get a little bit more of a visual on this to kind of see to kind of like see it in action per se. Let me just go pick a random pair here. I'm gonna pick any pair that ends in USD, just so that way like the currency dollar amount ends in USD. Which pair do you want? GU, AU, EU, which one?
Let's go with AU.
AU, so Aussie dollar. And we'll just click here, we'll go to the daily, like you said, we'll start there. We'll click replay and we'll just go to like a random bar, just so that everyone can kind of see this in action. So all I'll do is I'll just keep playing it forward. And at an area where you think it might be like kind of getting close to being a spot where maybe you might buy or sell it, just tell me to hit the pause button and then I'll pause it and we kind of walk through it. Fair enough?
Yeah, sure.
So it's going down, it's going up. You just let me know when to hit the pause button.
Sure. Stop there a minute.
Okay.
So we could say that as a previous high has just been broken.
Yeah.
That there, yeah. So
Would you wait for something like maybe something like that?
yeah, definitely.
What if
Was-
something like what if something like that happened? Would you buy something like that or not?
No, I'd wait for more confirmation on that one.
Yeah, so okay, cool. So you're essentially just letting the market stretch really far in one direction. What would you call this? Would you call this like
That
a
looks like
range?
it's consolidation at the moment.
And
So
you so you
the biggest thing that's standing out to me at the moment is around April 2016. Yeah, that high.
Mm.
That's a clear high to me. I mean, we can use the those highs and lows kind of where we are in August now, but that to me is in a consolidation. It's a bit difficult to play that out.
so you wouldn't be like selling at resistance or buying at support, you would just be waiting
No,
for some.
I'm just waiting for a real clear like that now. That's a big move.
Okay, so I've just paused it here. What would is this something you'd enter or would you like wait further or
I'd
like how would you?
wait slightly a little bit more. Keep going. Now I'd be interested in looking for a reversal at this point. So it's gonna start to go a little bit higher here somewhere. I'd probably drop down into the 4 hour and the 1 hour, and I'd be looking for, if I was using like order flow, a on the 4 hour or 1 hour, a high being broken, and then I'd get in on a buy.
Okay, cool. Well, since TradingView doesn't have the data in the 4-hour chart resolution for 2016, we'll just have to kind of wing it here.
Yeah.
There's a little bullish daily candle. Let's see what happens next. There's small candle. Do you think this is anything you would buy yet?
No, it's I think it's going to go down a little bit more.
So we've got that bull candle. You just tell me when to stop, just so we can
Okay.
just go
Keep
kind of
going.
visual.
Keep going. Yeah, probably now I'd be buying.
So you'd be buying right now. Okay.
Yeah.
Now let's say we're on like a $10,000 account, right? So maybe like
Yeah.
7 or 8,000 quid. What kind of position size would you use for something like this?
Sorry, how big?
The account, let's just say it's about 10K USD. So about 8,000 quid, 7,000 quid.
I wouldn't be going all in on this trade, because I'd anticipate that if I'm wrong and it might go against me, I'd want to scale into the trade. So I could be in too early at this point because my eye is kind of going to the left a little bit, and I can see a low that's not really been taken out. It's further along the previous year.
Here?
Next one along, that one there, yeah.
So if you did buy right here, would you kind of like add to it if it goes against you?
Yeah, yeah.
Okay, so like what
Um,
spots would you add at just so we can kind of like pre-plan it?
I wouldn't really have a place in mind right now. I'd just get into the trade because I got a feeling it's going to go up.
Okay. So what position size, for like the 10,000 US dollar account, what position size would you use right in this case?
On a 10,000, let's go with 0.05.
Okay, so very small position sizing. So
Yeah.
that would be, yeah, like, so 5,000 quantity. Well, do you set targets or stops or anything?
Um, so I've got an area in mind, and it's based on highs and lows. So when I'm looking at this, it's a shame I can't really draw on the chart. But
Yeah,
you've
like,
got, can I do it?
yeah, so I can do it for you. Like, what level are you trying to draw?
The next, the highest, the higher one again, further up, that one there.
Okay.
So from that height down to where the low is at the moment, where you got the buy,
Yeah.
that's like a measurement. So 50% of that is just above there. I'll be targeting just above that. That's around about 50%.
So just like something like that.
Something like that, yeah.
Okay, so
This
okay,
okay,
so I'll just play it forward. You tell
yeah,
me when to pause. I'll go real slow.
okay. So let's hit the profit then.
Yes, that looks like it hit it. It just looks like a okay. So, I mean, what this looks like to me, right, just essentially is like when the market is doing kind of just this clear little pattern of lower lows and lower highs in this case, you just simply like buy whenever there's like a lower low after you see some sort of confirmation. Obviously, we
Yeah,
couldn't see like the texture and granularity on this,
yeah,
but you're essentially just like buying new lows on the daily and you're selling new highs on the daily with a bit of context and experience.
yeah.
So that's
This is the
very,
thing,
yeah,
because of what I've done on all these different education groups that are out there, ICT being one of them. It doesn't matter whether it's institutional or whether it's EMAs crossing, MACDs, and all these other concepts that you can use. I find they all seem to work when you take into a context. You've got the higher time frame on the daily. When you hit that low, as we just described, and you go in, they will fire at that point. They also fire when you're in those zones where they're consolidating. But what tends to happen, and this is what I've done in the past, when I'm in the lower time frames, I've always been too prejudiced towards those signals and taking that as the gospel, the truth, without respecting what's actually going on in the higher time frame. So now that this is the only shift that I've really done. I'm focused. When I say I'm trading off the daily, my context, my narrative is all drawn from that time frame, and I will drop down into, say, the 1 hour or the 4 hour to look for that shift.
I've also noticed your position sizing is like incredibly small. Some people will risk, say on a $10,000 account, they might risk $100 and they'll have a stop loss, right? And not a plan to add to it. Or they'll risk 500 or $1,000, right? They risk 5 to 10% of the account. I've noticed your position sizing remains very, 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 very small relative to the account balance. Is there a reason that that's like a beneficial thing for you to do? Is there
Yeah,
a
yeah,
function for that?
100%. Because I could be wrong.
And so
Uh,
what would happen if you're wrong? Like how would you manage this if you had entered here just like we started at, but it started to go against you? How do you think you would have managed that?
I'd scale in. I'm anticipating. It's based on effectively the trade. Sorry, the markets. Any forex pair that we're looking at doesn't go in one direction in one straight line.
Mhm.
It always goes up and down and up and down. It's like the sun and the moon, and you know we go through these cycles. So I can get out of the trade still profitable, even if I'm wrong. And what I'm finding with this approach, price for me always seems to go back to 50%.
Mhm.
So I might just be too early in my entry, and price just wants to go down a little bit more. And I was a bit preemptive in the execution, but so say price has gone against me, and that has pretty much been the case over the last 3 months.
Yeah.
At some point, it's going to reverse, and this is how it's worked for me in the past. Um, Whenever I've been successful at trading and getting big results, it's just following this one approach on the higher time frame. I get too caught up in the minutia on the lower time frame and I start making stupid mistakes. I'm just got to be fixed on the daily and know that when it's gone so far in one direction, we are going to get a reversion back to a mean. ICT as an example, his optimal trade entry that he always goes bangs on about is after either like a breaker and a Sibia or a busy that he calls it, which is like a huge push in one direction, and then you get a reversal. But I'm trying to simplify that, and I don't need to go into all of that heavy detail on the daily. All I just look for it is price has moved so far in one direction. I know we're going to get some form of pullback. It's as simple as that. I'm not always accurate on when it's going to happen. So when it goes against me, I just look at it as it's a better entry for me, and I'm just scaling in with smaller position sizes and just getting better entries all the time. In this example here, it's just gone straight to take profit, but that's not always the case. So if it
So
goes against me, go on.
so let's say, for example, it went to right here.
Yeah,
Is that somewhere where you might add, or would you add
yeah,
before? Would you
I'd,
add
I'd
later?
add, I'd add that there.
Okay. So let's see, you add right here. That would be from here up to here was like, this says it's like $100. So if it went down to here, this would be almost an $100 drawdown on a $10,000 account. So yeah,
Yeah.
I guess it's not that much. It's like what, like 1% of the account. So but let's say now you're in both of these positions and then it goes down like say to here. Would you add here or would you just wait for
I'd
it to
add
pull
there
back?
as well. I would add there as well.
Okay, so in this case, you'd be on that position, that would be down $100, sorry, 200. This position, it would be down $100. So cumulatively, you'd be down $300, so 3%
$300.
add there. And then let's say it pops up to right here. Would you be trying to just get out of all three positions at break even, or would you hold? What do you think you might do likely in some case like this?
I'm letting it run. So my average in my trading account, the stats speak for themselves. I'm in trades for a month and a half.
Mhm. Okay, so like, let's say it pulls up here, you let it run. Let's say it like comes back here over the course of like the next few days and it's back to the low. Would you do anything there?
I'd wait.
Okay, so you'd wait, then let's say it goes and makes a new low here, and now you're in, let's say like $1,000 drawdown almost.
I'd
Would you,
buy in again and scale in again.
okay, you'd be in again. I would be surprised if anything like that far happened without a clean reversion. But then let's say at that point it like comes back up to here. Out of the four positions, you'd be in profit on the position average. Do you change your lot sizes as you scale in, or do you use the same position sizing?
So far, I've just used the same position sizing.
Okay, that's probably a way that gets you out of those really bad situations. How often is it that you would get something like this bad occur where it goes in like a 10% drawdown or something?
Um, so we had an episode just over a week ago with the Aussie pairs. It was Euro Aussie. On that particular example, I do have a stop. Um, just as far out as I could possibly make it. So if it is a crazy number, then that's like a guardrail that I've got, just to make sure you don't want to lose all of your account on a stupid trade. But I've got enough data over the years to know that if you push your stops, and my stops tend to be about 200 pips and above, you're not going to get hit by what goes on a daily basis.
Mhm.
But on this particular example, I was this spike happened over the weekend, and I was in bed, and I was in the garden, building walls and mowing the lawn, stuff, doing like that. I wasn't
Mhm.
really bothered by what was going on, and that's what happened. I come to the market on Monday morning and noticed that all my trades had disappeared, but it hadn't hit my my take profit. What had actually happened was, I've got a small account at the moment, and the leverage that I've got is really low as well. So I can only trade so much. I've literally maxed out my margin. I've got margin called on that Euro Aussie.
Mhm.
So they actually closed all the trades.
And then say, like, had you not got margin called due to leverage, do you think this would have worked?
Yeah, it's already hit targets.
Okay, so maybe I guess to prevent that in the future, you might either use like multiple accounts with like small sizing on each with different trades, or you might just use one very large account. And maybe even if you're ever able to, perhaps just if you just simply had higher leverage, then that wouldn't have happened.
Yeah, I think it's depends on the person really. But for me, I'm in the UK, and I've just used UK brokers. The one I went with, I didn't actually realise that the leverage was only kind of something like 30 to 1.
Mhm.
So it really does limit what you can do with these approaches. I've whenever I've done it, I had a leverage of 500 to 1 that allowed me to actually shrink the lot size down small enough where I could operate in this way. But I mean, that account that I've got, as small as it is, I was close to doubling it within 3 months.
Mhm.
And it was only because I got a margin called that I lost 50% of my profits, but I'm still up.
Wow. And in only 3 months, that's pretty crazy.
Yeah.
Um, wow, that's really interesting. So essentially all you do, just to kind of wrap this up, because I do know you're a busy engineer and you've got a work meeting in five
Oh, yeah.
minutes. So I guess we'll wrap this up and just say, so you took all this time learning trading for the past nearly 15 years. Just now have you started to get some sort of consistency, and it has simply boiled down to just using small position sizing on a relatively larger account for what most people would say, small sizing for a large account. And then you're simply waiting on the daily chart to have really big moves in one direction, generally to sweep past previous highs for you to sell, or to sweep way past previous lows for you to buy. Then you buy at what you'd consider a quote good price. If it goes into profit, you tend to take profit about like halfway of the way back up from the previous impulse down. You just try to target halfway for it to pop up. And then if it goes against you, then you manage it by not using a stop loss, but instead just essentially dollar cost averaging, just adding the same position size. And if it goes way further against you, you add even more. And since you size small enough, you generally don't ever hit a margin call. And then on top of that, whenever it does finally revert, you get out of most outcomes either in profit or around a break even if you're wrong. And the current stats have been you've almost doubled an account within 3 months, with the exception of the Euro AUD trade, which was we could somewhat say was out of your control because it was just due to leverage, but you were still right. Had you had the proper leverage, you had the account balance, the pullback would have resulted in a net profit on those trades. But even with that anomaly happening, you're still up 50% on the small account within
Yeah.
3 months. And this
Yeah.
summarizes your trading journey up until now.
Yeah. 100%.
Wow. I guess the last thing I'll just ask you before we hop off here is for everyone listening right now, what would you say helped you the most in transitioning from being essentially like a losing trader for almost 15 years up until just now starting to get some consistency, what would you suggest to people?
Two things. Find someone who is transparent and shows all the results, and be in a group where you're on camera. I think that's important. Where you can be accountable and you're actually discussing what you're doing. It needs to be an open forum. The other thing that I did, like I say, I've made a lot of silly mistakes with trading. I was on a path. I could see when it worked, but I always get distracted by other things. The nice thing about the last 3-4 months is it's always the words were in my head: keep it simple, control your risk, and that is effectively what I've done. I've got rid of all of the stuff that I used to do, and I've just gone up to a higher time frame, and I've literally looked for price to go so far in one direction, and then all these other things that we do, whether it's ICT, supply and demand, support resistance, all these things, they all work. It's all subjective, but they all work when price is overextended.
Yeah. Okay. Interesting. Ian, I'm really appreciative you took the time out of your very busy schedule to be able to do this call and to be able to share all of this stuff with me and our audience here on YouTube. So thank you, Ian.
Thank you, Nick.
All right.